Alright, chat. After all your request, we are back with another video. So in this video, I'm gonna be explaining to you about my standard deviation trading style, guys. Okay, this type of trading do not belong to me, but I use this in my own way, and I'm gonna teach you people how I use my standard deviations. All right. So before that, I want all of you to copy this standard deviation settings. Okay, I'm going into the settings, and you can take a screenshot. Okay, I have few numbers here, and these are my standard deviation settings. I use Fibonacci retracement, this tool, to mark out my standard deviations. Okay, so first up, let me teach you the technicalities that I use to trade standard deviations. All right, listen to what I'm saying carefully, guys. Okay, if the prices at the moment is bullish and your bias is bearish, all right, in such cases standard deviations might help you get a spot on entry, guys. Okay, so let's suppose the prices are going higher, right? The prices are going higher and you have a bearish bias, right? So what to do in this case? Okay, considering the low, okay, that is where the move started, okay, that is this low, okay, to that high, you have to mark your standard deviation. Okay, if the prices are going up, okay, so that is how I use. Okay, that is how from that low to that high I'm gonna mark standard deviation. Okay, that low to that high. Okay, so this gives me two important areas, that is 2 to 2.5, right? You can see 2 to 2.5 area, I'm gonna mark it as SD projection. Okay, and another one is 4 to 4.5. Okay, I'm gonna talk about this levels later on in the video. Okay, so let us discuss from like 0 to 1. Okay, 0 to 1 might be a small continuation. Okay, this might be a continuation because these areas actually I trade them as hidden areas. How do we know that the prices are gonna fall from that, right? We don't know, right? We don't look into the previous data to identify is there any confirmation there at that level, no, right? So how do we know that this area is gonna play out? Okay, for that we have a number that is -1, you see there. So that -1, okay, in exactly at -1, what you have to see is you have to look for a retracement, guys. Okay, you have to look for a retracement. Okay, if the price takes a retracement exactly at this level, okay, that means this 2 to 2.5 level is gonna work for you. Okay, and now again coming back to the point, this is not a sniper, okay, or a sharp trade, okay, or a sharp entry, guys. Okay, this is exactly like support and resistance. Okay, sometimes the price might come directly start falling, guys. Okay, and sometimes the price might consolidate around that area and then continue lower. Okay, or maybe sometimes go get the stop losses and get rejected, get back into the zone and then continue lower. Okay, these are the three cases that can happen in standard deviations. Okay, if you're looking at standard deviation on 15-minute time frame, okay, and if there is a candle closing above that, means this is of no use. You can have your expectancy at 4 to 4.5 level, right? So that is another area. Okay, you can expect your high probability trades at 2 to 2.5 level, considering is there a retracement at -1. All right, so exactly vice versa. Okay, if the prices are going down and your bias is bullish, okay, here a bias plays a very important role. So I recommend you people to master bias. All right, so in a bearish case, how do we do that? Okay, so let's suppose your bias is bullish and the prices are going down, right? So in this case, how do you mark okay, in this case, how do you mark that? Okay, you have to consider that high to this low, right? You have to consider that high to that low, something like this, and the price action is going to look something like this. Okay, so look at that. Okay, so what do we want? We want a retracement. Okay, a small retracement exactly at this level, that is -1. Okay, and if there is a retracement at -1, then I can expect a reversal. So you can see 2 to 2.5, the price stabs into the 2 to 2.5 level and then starts going up. Right, and these areas are hidden areas. Only the people who are looking at these hidden levels uh can find their entries. Okay, no other trader can find their entries at this point. Okay, so that's it for the explanation, guys. Let me show you some live examples. Okay, so see, this is 5-minute time frame, right? So here I have a bullish bias, right? The prices are going up. Okay, so this is 19th January. Okay, this is where I took a live trade. You can go on Discord, you can check yourself. Okay, I took this trade and I also closed this trade live with the people, guys. Okay, so what I did was I considered this low to that high. So if I go on 1 minute time frame and if I show you the exact area that I used was this area, guys. Okay, I used this low and that high to mark out my standard deviation. Okay, so let me show it to you guys. Okay, so that's my Fib tool, and I'm drawing my Fibonacci. I'm drawing my standard deviations, so you can clearly see I'm extending it for you guys. Okay, so you can see exactly at 2 to 2.5 level. Okay, that is the area that I actually marked. Okay, that is the area I marked. Okay, as I've explained, guys. Okay, the prices might go up exactly like support and resistance, and then reject back into the zone. Looking at this candle, I entered a short trade on gold with one lot exactly on this candle. Okay, exactly on this rejection candle. My entry was somewhere like that, and that above that was my stop loss. Okay, and I managed to almost make 1:4 from that trade. This was the trade, and this trade was actually closed live with the members, guys. Okay, my bias for the whole day was bearish. The reason that I knew, okay, it was a sharp confirmation for me that the price are gonna fall from that was this small retracement exactly at -1. That is what confirmed me that the price are gonna fall from 2.15 level. Okay, so you can see this retracement. Okay, exactly I said right. -1, there will be a retracement at -1, and that is where you know that your standard deviation drawing or marking is accurate. Okay, it's correct. You are not wrong, you are correct. Okay, if there is no retracement, the price is going up. Okay, means that your standard deviation marking is wrong. Okay, so always look at this -1 level. Okay, always, like, people often ask me why I use this -1 level. That is why I use this -1. There must be a retracement. Okay, and you can see the price comes in, gets rejected, and that is where I enter my short, and boom, like that is how I booked 1:4 on this trade. Okay, all right, so here again I'm on 1 minute time frame. Okay, that is the deadliest time frame ever in the financial markets, guys. Okay, I'm showing you these examples because this works phenomenal, guys. Okay, so here you can see I have a bullish bias. Okay, I have a bullish bias. So the prices are falling, right? You can see it's New York, it's peak New York session. Okay, it's peak New York session, the prices are falling, and I have a bullish bias. So what I do is I mark out this high and this low, and using this I mark my standard deviation projections. Okay, so look at this, from that high to this low I'm marking a standard deviation projection. Okay, and I don't care about 2 to 2.5 or 4 to 4.5 level right now. All I care is there a retracement at -1 level? So you can see the price falls exactly at -1, there's a retracement, and then the price continues going down, and that is what confirmed me that there might be a strong push to the upside. Okay, either at 2 to 2.5 or 4 to 4.5. So let us look what exactly happened on 2 to 2.5. If I mark the 2 to 2.5 level for you, the area of projection that is here. Okay, we can see that there is no signs of bullishness. Okay, there is no signs of bullishness. The price is not either displacing higher or rejecting. Okay, there is no displacement at all, and exactly at 8:30 there is a news. Okay, so exactly look at that, the price falls directly on the news day. The price directly falls into the 4 to 4.15 level. Okay, immediately retraces. Okay, and I know, guys. Okay, because not everybody is trading that area. Okay, and once you see retracement, that is where you can plan your long trades. You can see later on the price comes back, hovers around this area. Okay, and as soon as the price gives you a displacement, that is where you can enter your trade. Okay, it might be here. Okay, your entry might be there, or your entry might be here. It doesn't matter, you can take your entry anywhere you want. Okay, so that's gonna be my stop loss. Okay, and I'm gonna target all the way up that high. Okay, so you can see that is like the price hit my target. Okay, within few minutes, and you can see the price starts going up higher and higher and higher. Okay, and that is how I usually use standard deviation to identify sharp reversals in the market. It's a really aggressive way of trading. Okay, and it's really risky, and what I recommend to you people is to back test before actually implementing it the live with the live accounts, guys. So I hope this find you interesting, and you people educate yourself with this. And yeah, that's it for standard deviations, guys, and I'm gonna be presenting to you with more quality content. So just share me your opinion about this standard deviations. Thank you so much. See you in the next video.